Hello and welcome to the daily market report from IG. Well, it's been a blanket risk-off day today here in Asia. That's what we've been seeing so far in all the parts of the capital markets that are open. Euro-dollar has really plunged today. We've seen euro-yen coming off quite sharply. Euro-sterling also down well over 1% as well. So the euro's been under big pressure. And clearly the reason behind that is what we're seeing in Cyprus. On Saturday there was an agreement that bank depositors would take a haircut on their savings effectively. So what's been previously looked at was 6.5% or so 6.75% levy on anyone who has deposits under 100,000 and about 10% for anyone who has over 100,000 as well. Now, the big taboo about this is the first time that we've seen since the European debt crisis that the depositors are being utilised in terms of financing the woes of a sovereign. They will exchange that for about 10 billion euros, which is pretty significant compared to the size of their GDP. It's about 80% of their GDP, which is also quite interesting because this would be effectively the biggest sovereign bailout in terms of percentage-wise since the European debt crisis has come through. There are some parallels, I guess, to what we saw from the Greek private sector involvement, where we saw the bondholders taking a haircut. But this is the first time that we've ever seen bank depositors actually take a haircut for the situation there as well. So a lot of people are questioning whether this will have ramifications on other parts of Europe, whether we will see big runs on banks here, in Cyprus, and big bank runs in other parts of Europe as well, perhaps Greece, perhaps Portugal, some of those other nations which do have financially weak situations. Now the ECB have come out, Mr Asmussen has come out over the weekend and said that this is a one-off, but I think the bond market could take this quite negatively. Not the Cypriot bond market. We think there'll probably be some positive ramifications there because bondholders will not be touched here. This is going to be, as I say, down to the deposit level. But we have seen euro-dollar coming down to 128.95 on the fears that potentially we could see bank runs in other countries. Whether that materialises, I'm not 100% sure. I don't believe that we will. I think that people within Spain, people within Greece, people within Portugal will see a difference between their country and the financial aspects of what we've got in Cyprus. The big problem with Cyprus is that their assets with their banks hold are something like 4 times what their GDP is, their gross domestic product. So, the banks have huge and significant amount of leverage. A lot of that is held by Russians, a lot of it is held by foreign creditors as well. So, there are going to be a lot of pain felt by people with holdings in those banks at the moment. So we will be keeping an eye on the European banking sector when it opens today. There's a pretty good chance you are going to see European banks get sold off very, very heavily. Whether that becomes a buying opportunity longer term, I'd probably suggest it will be. My theory is that I think we'll see some pain in risk assets over the next 24 hours, and I think people will look at that. But what we've got to happen in the next 24 hours is actually a vote in Cyprus. Now, the government at the moment hold about 20 out of 56 seats, so they will be relying on other parties, opposition parties, to vote through this planned bank levy that's come through. Now, actually, if we do get a no vote, if they actually can't get this through, there could actually be worse ramifications for the sovereign. We could actually see a default. The European Union will probably not hand over the money, which is being brokered by the ECB. That could have worse ramifications. There is actually a chance we may see this being revised as well. So people who have savings under 100,000 may see it only pay at 3%, which would be much more positive for risk assets. We'll also have to look at the Cypriot bond market. Now, yields on the front end, 2 years, are trading around 9.5%. I think that you're probably likely to see some buying coming through because people will be seeing that bondholders aren't being touched, and that could be a positive for their debt profile longer term. But it has been a risk-off move, as I say. We're seeing it in the Australian equity market. The market's down 1.5%. We're seeing likely to see the Japanese market come under a bit of pressure because dollar yen's come off quite sharply as well, taking what we saw from Friday. And again, we're looking very much at the Cypriot vote tonight. If we get a no vote, we're expecting risk assets to come under further pressure. A yes vote as well, when Europe get their chance to have their say, could also have ramifications, perhaps less severe though. So it's going to be interesting to see, but clearly there's going to be a pickup in volatility tonight. The VIX at 11.3% should move higher, quite materially, I'd imagine. People will be looking to buy put protection where they can. And we'll be keeping our eye very firmly on the currency markets because we know that equity markets are going to get hit pretty hard when they open a bit later on today.